Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. I'm Suyash Maheshwari, and with me in the studio, as always, is Amit Ranjan. And it's a Monday morning, but the markets have kicked off the week in the red. Nifty in the opening trade itself gave up about 200 points. Bank Nifty was seen testing 48,000 levels as well, but actually the markets have further corrected from those levels. We have broken below the supports that there were. Nifty is down about 1%, so is Bank Nifty this morning. But a lot of this was expected, given the series of events and what happened in the Middle East over the weekend. Amit, is it how is it going? The global setup is also looking fairly weak this morning.
Red is the order. It's wait and watch time. Actually, the dollar a little unchanged. Oil prices eased on speculation that the conflict would remain contained beyond this. Iran has confirmed that there will be no further escalation of tension from their side. President Biden has reportedly said that they will not support any retaliation from the side of Israel. So it is wait and watch time right now. What has spiked is basically metals, because there were fresh rounds of sanctions on Russian supplies. Aluminium surged 9%, nickel surged 8%. So that was the only spike that happened. Dow Jones closed in the negative at 1.24%, S&P 1.46% in the negative over the weekend. Nasdaq composite closed 1.62% in the negative. Stocks was slightly in the positive, and the only one in the green at positive 0.14%. Hang Seng this morning is in the negative at 0.78% in the negative. Nikkei 2 is in the negative at 1.07%. Most of the companies also are in the red. The order of the flavor of the week will be Tesla, but that has been in the red also this morning, last week.
All right, and big crash in Wall Street, worst falls in January of this year. And of course, most of that correction was on the back of course, Wall Street bracing for a response from Israel. And so far, as Amit also pointed out, that has not happened. Those who are not in the know, Iran on April 13 launched hundreds of drones and missiles against Israel. The attack, by the way, came as a response to Israeli raid on Iranian consulate in Syria 2 weeks ago. And Israeli army, after that overnight barrage, has said that the damage pretty much was minimal. 99% of the projectiles were intercepted by the jets of those of its jets and its allies, including United States and the Jordan. But going into the weekend, all eyes were on what Israel is going to do next and the extent of its response. But going by the reports, for now it looks like Israel is not looking for a big response, and comments from Iran also suggest that as of now things are settled. But I mean, the hope is that better sense prevails from here on, but the markets certainly will be on the edge. But coming back home, Nifty, in that 2-day correction, pretty much we have opened about 1% lower this morning as well. On Friday, we corrected by 1% as well. So we have given up about 500 points on Nifty from record high levels. Overall, the setup is looking rather weak. The broader markets are also reeling under pressure. Mid-cap index is down 2.5% this morning. The small-cap index 3.5%. India VIX has spiked by 8%. So overall, the setup, the texture of the market is looking weak. But we have been talking about it, that the global headwinds and the global cues, that is what's going to perhaps put that lid on market gains coming forward. But from where we go from here on, let's understand that with our technical guest. Joining us on the show now is Avni Bhatt, Senior Vice President at JM Financial. Avni, good morning to you. Thank you for joining us here on News 9. Nifty again has given up about 500 points from the the recent record high, and we are pretty much holding above that the 20-day moving average, that is about that 22,270 levels. But again, the crash, the sharp correction we are seeing in the market is because of what's going on in the Middle East. I mean, the market are certainly on the edge, but considering if things remain fairly.
Amit and all the viewers. So yes, Nifty and Bank Nifty, both index futures, as in Nifty futures and Bank Nifty futures, saw some unwinding on Friday itself by the FIIs. and FII's selling was also seen, and an overall unwinding was seen to the tune of around 4% and likely to rise up to around 13 to 14%. So we do have a bit of left in the market today, through gap down opening. The crucial levels to watch out for 22,200 on Nifty, which was the earlier swing low, and 47,800 for Bank Nifty. These two are the crucial levels. If these two levels are also broken, then we are heading towards a temporary, kind of, you can say a negative market. That bullish trend will get negated. But till the time these two levels are held, I think there will be some kind of consolidation. So these are the two crucial support levels. If at all these levels are broken, then both these indices will attract fresh shorts. On the upside, the immediate resistance now becomes 22,500 for Nifty after today's gap opening, and the next crucial resistance is at 22,700 for this week. And for Bank Nifty, it is 48,600 and 48,800. These are the two. Initiate some bit of long trades with a minor stop loss around and to either sell or buy. Let the indices touch their level.
170 levels, and they have given a target of 390. This is on the back of attractive valuations that Jefferies has given a call, and it expects a 47% jump from the current levels. Do you think ONGC is around to touching 390 in the near term?
Yes, Amit. So, see, ONGC has already made a base formation around 257 to 260 area. A slightly medium term, I would say around 320 levels being captured on the upside. So,
rising in a falling market, it's up about 0.775% this morning, and the numbers from the IT bellwether were largely in line. Revenue figure, although, was slightly disappointing, but margin at 12 quarter high, record deal wins. I mean, quite impressive stuff from TCS over there. Even the commentary coming in from the management is optimistic, and brokerages are sounding equally bullish. I mean, Avni, coming back to the stock again,
consolidate in a range of 3960 to 4080 on the upside. So some more upside left, but no fireworks, as in, it's not going to cross 4100 and we see a runaway rally. For the time being, it will digest the 230. Immediate trading target for this stock is around 245, probably in April series itself. And going ahead, it may go up to around 275 to 280 in next 1.5 months. Be the target for the stock, keeping a stop loss of 1280.
All right, Bharat Electronics and Adani Ports are on the radar of Avni Bhatt. Ma'am, thank you for giving us time here on News9. Always great insights from you. But with that, let's slip into a short break. On the other side, Gaurang Shah, Senior Vice President at Geojit Financial Services, joins us.
A lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India.
The old format, and then we had podcasts.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
The affluence has been growing. Cars are becoming more a reflection of what you are. The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy the SUV.
Subscribe and get free vouchers.
20,000 people dead and counting.
This morning after, Nifty went on to test as 200 points. I'm made to believe Gaurang Shah is here. He has joined us. Thank you, sir, for giving us time here on News 9. And, the markets, of course, have opened with significant cuts, and that was, of course, again expected given the turn of events in the Middle East. It looks like things over there are at a standstill for now, but the markets are certainly going to be on edge for the next few days, if not weeks, sir, isn't it?
Thank you, Suresh, and morning to all of you all. So, I think this was an event waiting to happen given the kind of news flows that we were getting from the Middle East, and especially after last year's 7th October attack by Hamas on Israel and the developments we know all about this. But the fact of the matter is also, Suresh, that this is not the first time that these kind of events have happened. We've seen last year Israel-Hamas, before that we've seen Ukraine and Russia. Now we are witnessing Iran and Israel. And possibly in the future, you might have some more events unfolding, which will have its own impact on the global markets, including ourselves. But, I was referring to this situation yesterday when I was discussing with one of my friends. I asked him, he asked me the same question, and my one-line answer to him was that, look, brother, if we survived COVID-19, this is nothing. And the rest is in front of us. So this will also, we'll overcome this. It's a matter of time. Knee-jerk reactions are always great opportunity to buy, Suyash. And in terms of Q4 numbers, at least we have kicked off the Q4 number on a decent note. Last week, Friday post-market, we had TCS announced its numbers. And they were much better than what the street had estimated. And the understanding is that possibly you might have a better color and a shade on Q4 earnings for India corporate this time around, and that is likely to continue. So this correction, I think, is a great opportunity to buy.
All right, correction is a great opportunity to buy, and of course we hope that better sense prevails. But so crude prices after that initial knee-jerk reaction have receded. They are back around that $90 a barrel mark. That's on Brent crude. But again, Iran is the third largest OPEC producer, and the kind of rally we are seeing in crude prices, and this is not just because of supply side concerns, but also the demand from China is also expected to pick up, and economies are on the mend. Are we heading towards $100 a barrel mark very soon, sir? What's your sense of things?
Well, I hope not, to be very honest, because it's going to be a difficult situation for all emerging market economies which are dependent on import of crude like India and China. Suresh, what I'm more worried about is the kind of activity that is happening at the high seas with the maritime vessels, containers, tankers being hijacked or attacked. That is more of a problematic situation. With India, yes, Iran and Iran and Russia are crucial countries with respect to securing our global, local energy requirement in form of petrol, diesel, LPG, kerosene, etc., etc. And the reason why it is more important, Suyash, is because with these two countries, we have rupee-dominated trade and not dollar-dominated trade. And I was reading a report last month up till March end, we imported 7% more of our energy requirement from Russia than the rest of the world where we have dollar-dominated trade. So as far as we are securing our energy requirement from rupee-dominated trade and discounted prices, $90 a barrel should not worry us. But in case if it has to go towards that $100 mark, then I think situation might get a little bit worse off till the time we have a decisive cool-off on crude oil prices.
All right, so and you spoke of TCS's earnings. I mean, the numbers are largely in line. Revenue was a slight disappointment, but margins are at a 3-year high, record deal wins for TCS as well, and the commentary is, rather sounding optimistic as well. So do you think we are at this pivotal point for our, information technology companies, or do you think that TCS is a standout here and, some bit of pain will continue for other bellwethers like Wipro and Infosys, to name a couple?
We've been discussing IT for a long time. So even last week we did that, and I had very clearly said that we are going in the earnings season with the least or minimum expectation from the IT sector. If they deliver better in certain areas in terms of numbers delivery, well, it will go down well, and it has gone down well. Where there's the kind of surprise deal wins were something that has actually soothed the sentiments, because the view on the street was that it is going to take a while before the large deal starts coming in for the IT sector. And normally, TCS is the stock which sets the background of earnings environment for the IT sector. And I hope the rest of the pack also delivers in terms of positivity on the numbers are concerned. And we've been positive for a long time when a lot of people on the streets were asking you to stay away from IT. We were of the opinion that difficult times are there for any sector, any company. It's not like these difficult times are not going to see the end of the road. And that's what exactly is visible. And our sense is that the new financial year that has kicked off 1st April 2024, you are going to see better color in terms of earnings visibility for IT sector, with both margins improving and deal wins.
Good morning, Gaurang. Now, difficult times, would they end for Vodafone Idea? We have prodded you on this subject before. Their follow-on public offer opens this week on the 18th. They are aiming to raise 18,000 crore through this route of the total of 45,000 crores they are aiming to raise through equity and debt. Now, their share is up today, almost 3%. Who do you think should buy the Vodafone Idea stock? It's very low price. Do you think it is good, at least for first-time investors?
My good friend, please tell me what is the debt on the balance sheet of Vodafone Idea balance sheet. I think it is 2 lakh crores. Correct me if I'm wrong.
2.5 around.
2.5. So you're not even borrowing 10% of that. And what are these 10,000, 15,000, 20,000 or 45,000 crores going to do when you have such a huge debt on the balance sheet? You are still living in 4G when we are talking about 5G and migrating onto 6G. You are losing subscriber base to the two large players like Bharti and Jio. And you have multiple issues. Honestly, Amit, I will not comment on buy, sell, hold on Vodafone, because we don't cover such stocks. We believe it is a waste of time. Unless we see some meaningful recovery on the fundamentals of the stock, we are going to keep ourselves away from it. And it is more of a trader's delight rather than an investor's fancy, to be very honest with you, Amit. And let me give again blanket disclosure. We have coverage on Bharti Airtel and Reliance Industries, which holds the business of Jio Telecom, Jio Mobility. And we are also of the opinion that possibly you are going to see a 10 to 15% hike in the tariffs over the next couple of months. Vodafone, well, if you want to go and commit suicide or you want to commit a hierarchy, I think, yeah, it's your choice. But if you are a sensible investor, better buy quality than quantity.
Gaurang, suicide and harakiri for Vodafone, but do you think then, according to you, this space is heading towards a duopoly with Airtel and Jio only, despite the fact that Vodafone has got some cushion with the government coming in?
So, to ask you on a humanitarian ground, Amit, I wish some things change for Vodafone. Because I mean, in a country like India, when you have such a huge subscriber base, and no country would want to have a duopoly, right? We had many players in this field, but then we know what happened, to those many players, from being overcrowded to now being just two large players, third player struggling to survive. And I hope there is enough competition so that the subscribers have a fair deal in terms of valuation and pricing. I honestly speaking, I would say that with the kind of growing number of hands which hold Android phones, which use data more than what they used to do pre-pandemic. Post-pandemic, for you and me also, data usage has gone up, and we are paying a decently higher price than what we were paying earlier. So let's hope that this duopoly situation doesn't happen, and we have level playing field in terms of incumbents providing the service and for the subscriber to have a fair price.
All right, and before we let you go, sir, the going has been definitely good for our markets. We have seen corrections along the way, but buy on dips has certainly worked out. But I was looking at this one index, Nifty Next 50, that has actually outperformed most indices, even the small and the mid caps in 2024. The index is up close to about 17% in the year to date. I mean, do you think this is a pocket where one can look to invest at, as it offers, the best of both worlds, stability of your larger bellwether companies and growth opportunity of your smaller size firms, sir?
So, Next 50 is going to become the next big thing, Suyash. And possibly, I mean, see, if you were totally, low risk appetite, it has been always prudent to go with, benchmark, whether it is Nifty 50, whether it is Sensex, or whether it is, the next 50 stocks. You have relatively lower risk. At the same time, you get lower returns also. But you are not worried about choppiness, volatility, and if you want to play a little bit more safe and secure, then definitely you can go and invest over there. But remember one thing, there is nothing, safe, there is nothing secured, and there is nothing guaranteed in stock market.
All right, there is nothing safe, nothing secure, nothing guaranteed in stock market, especially in the times we are at. That's a word coming in from Mr. Gaurang Shah. Sir, great insights from you as always. Thank you for giving us time here on News9. But before we wrap things up, let's look at how the markets are doing, because we have seen a recovery from the day's low. Nifty has in fact reclaimed pretty much all that was lost after that initial gap down opening. We are where we kicked off the day. Nifty is currently hovering around that 22,350-60 odd range. It's down 0.7%, and this is as of 10:10 a.m. this morning. Sensex is also down 0.75%. The mid caps and the small caps, I mean, both indices are down about 1.5% or so, but the recovery has been rather strong over there. Remember, the mid cap index was trading with a cut of about 2.5% this morning in the opening trade. The small cap index was even worse off. It was down 3.5%, but we are seeing some bit of recovery from lower levels. Nifty small cap has in fact reclaimed 16,000 mark. It's now above 16,200 levels, and the small cap and the mid cap index is making its way towards a 50,000 level as well. India VIX, although it is at 6.74%, it's higher, but we are still in that comfortable zone at 12.31. I mean, we have spent a lot of time at 15-16 odd zones, so 12.31 should not be that concerning, but keep an eye out on that, especially considering the kind of setup we are currently in, and also the global headwinds coming our way. But on that note, let's end this show. We'll see you at 4 p.m. on Last Tick, but up next is World Business Report.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on four wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas-guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.
film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a